Why the crypto market's down today, what to keep an eye on in a quick market snapshot. What's up, party people? It's Crypto Cronkite. Crypto derivatives open interest has plunged 20.5%, which was $162 billion getting wiped out, marking the largest one-day drop since June. Perpetual futures volume hit $553 trillion with negative funding rates, classic signs of mass long positions that have unwinded. Bitcoin liquidations dropped 53%. This followed Ethereum and Bitcoin falling at key resistance, triggering a wave of stop losses and margin calls. U.S. stocks reacted to fresh Fed rate hike fears, sending the S&P 500 and NASDAQ 100 down 0.8% in pre-market. Crypto, with a 0.9 correlation to equities, felt the impact. And despite gold's 1.2% gain, crypto didn't benefit from the typical correlation with bullion. Markets now focus on tonight's U.S. jobless claims report for clues. Ethereum stablecoin supply reached a record $140 billion, yet Ethereum did underperform, declining 0.36% versus Bitcoin's 0.83%. The altcoin season slid to 51, with Chainlink and Solana reversing earlier gains. Profit taken after Ethereum's 25% weekly rise and Tether's $120 million Bitcoin purchase failed to shift the overall market sentiment. Quick market snapshot. This dip appears to be a healthy market consolidation following a 26% monthly rally. Total crypto market cap remains above its 30-day simple moving average at $3.55 trillion, with ETF inflows still consistent. Key supports to monitor: the $3.8 trillion Fibonacci level and Bitcoin at $118,000. A bounce here could indicate a renewed leg up. A breach lower could signal deeper consolidation. What to watch for: U.S. jobless claims released this evening. It could influence the Fed rate chances and market tone. Bitcoin's $118,000 resistance level and a total market cap at $3.8 trillion. Look for support there. That's critical for market direction. And Ethereum stablecoin foundation and institutional tokenization news, in particular Goldman Sachs, could drive a renewed altcoin momentum. But the bottom line is today's pullback is mainly technical, driven by derivatives, resets, and equity-linked profit-taking, not a structural shift. If support holds, we could be setting up for the next leg higher, especially if macro data remains favorable and institutional news resurfaces. And that's the way it is. I'm Crypto Cronkite. Hit like or subscribe to stay on top and be ready for that next drop.